Howdy, folks. Welcome to our This Week in Crypto stream for today, March 18th. We are going to uncover a lot about Bitcoin, some about plenty of altcoins that have been requested by the community and will be requested here live for those watching. So we'll try to get to probably a few more than usual this week. It's going to be just myself along with our amazing stream admin here at Balresh, who is monitoring the chat along with me to go over any pertinent questions you guys may have. But as far as this past week, we have seen a lot of sideways action. It has been an overall good week for the majority of assets, at least here in the top 100 that we can see. We see several mid-cap assets, particularly in this, 50th to 70th ranked market cap asset range. Plenty went over 20%. We see Bitcoin up 3% or so at around 40.5K right now. Ethereum did a little bit better and is back above 2,800. That's a good sign. Overall, it does appear that being in altcoins over the past week was the better bet over Bitcoin, which is not something we've been able to say often over the last 3 to 4 months, ever since prices started declining significantly from the all-time highs made in mid-November. So that said, there's quite a few reasons. Volatility was super rampant with the FOMC making its decision to raise interest rates a couple days ago. They decided that they essentially confirmed what many people were speculating, and that was that rates would be higher. Companies would be more impacted by this, of course, in the S&P 500. We'll talk about the S&P correlation later on in this call, but there is a reason that matters in crypto, and it has a lot to do with the way that prices were moving and still are moving in close tandem to what's happening in not just the US, but world equities markets in general. But obviously, our goal here is to stick to as much crypto analysis as possible, and we'll be trying to do that the best way we can. Before we move away from the screener, it's worth noting that prices went up. We saw a lot of flatness here. Obviously, these are stable coins here, but plenty of other assets, which are also represented down here. A lot of flatness going on with some bullishness from the altcoins, but look at how the social volume did in comparison. We saw major rises in discussion for a lot of assets. Tether was talked about at a plus 51% rate compared to last week. XRP over 40% compared to last week. Hex 54, 55%. Even Bitcoin, Ethereum, very slight increases in discussions. That's a good sign, because that means that there's more overall social volume beginning to come back to cryptocurrency when there really were some low discussion rates indicating that many traders, whether they be small, medium, large sized, were excavating the crypto circles of chatter because they just were not interested in the gradually declining prices that were going on for the past 3-4 months here. So with them starting to return, or at least discussions starting to blossom up a little bit more, it's a very promising sign that prices can eventually move back up, or at least this is going to cause more volatility, right? With more discussion means more polarization. We'll talk a little bit about sentiment too, but I just wanted to point out that when we see major rises in social volume like this, it's generally a good thing for crypto overall, even if it's everyone saying, crypto's about to plummet or crypto's about to go to the moon. Doesn't matter. More discussion equals good. So that's a quick snapshot of what the screener looks like here. Let's take a look at how the news has been impacting crypto to see if there's anything there. We're looking at the last 3 months. Make it just a little bigger here. The last 3 months of discussions related to inflation, which is in blue, COVID in red, and war in dark blue. These are obviously three of the primary topics that have been on everyone's minds that aren't directly related to cryptocurrency, but very much do impact cryptocurrency. Going back to the beginning of COVID 2 years ago, more recently, inflation for the past couple months, especially since the beginning of the year, and then war, of course, beginning in early to mid-February, about a week or two before Putin made it official that there was going to be a war declared. We can see some interesting trends here. It may just look like a few bars on a chart, but if you really zoom in here, look at how prices wavered, especially on the very massive spikes. So we look at the light blue here, inflation, huge. There was a pretty moderate to notable rise here going on February 10th. Big discussion of inflation and the FOMC's upcoming moves. Prices plummet right on that line, right? This was the local top perfectly. Here, this was the breakout of war when Putin made it official that he's declaring war on Ukraine. The initial price drop was happening right before the crypto forums really started to blast off about the subject. And once they started to blast off about the subject, which was likely occurring due to the fact that prices were falling off of a cliff, that is when prices began to reverse, right? And that's very often the case, because a story will go down, a major price direction will occur, either up or down, in this case down, and then the crowd starts to talk about it and say, oh man, it's going to go down even further. War is a big deal, which is true. War is a big deal. But their fear kind of drove the reversal to happen, because when the crowd in unison decides that something is a big deal and will lead to a price drop, or a big deal and will lead to a price rise, more often than not, the opposite occurrence comes true. This is a zero-sum game, just like any other sector. And if everybody believes the price is going to go down, that won't be possible, because for every sell, there must be a buy. For every buy, there must be a sell. And whales, people with a lot of weight in the markets, will capitalize on this every day of the week when there is a consensus or near consensus on where the price is going to go next. So naturally, at least here, right, when the war news broke, as soon as people started reacting to the news, that's when it was clear that the consensus was that this was bad for crypto, and they had this recency bias of prices dropping right here to support them. So of course they thought that, and then boom, immediately the entire price recovers over the next 12 hours. We see a little ranging, another big boost. Everyone kind of starts to presume that the war is not a big deal anymore, and that's why the price is rising. So you can see how these trends work. Fading fear is generally a good sign for crypto. It occurred for COVID over the span of 2 years. If I go back, before I do that, I'll show, COVID itself here in red. There obviously hasn't been nearly as much talk about COVID being 2 years old, a story that's 2 years old, even if it's still very much a real world event. It's getting overshadowed by the more recent and pertinent topics such as inflation and war. But now that we can see what that perspective looks like, let me show you what COVID looks like just over these past 2+ years. I want to make sure to include March 10th or so. I forget what day it was in 2020, but I want to make sure that's included to indicate when Black Thursday was and what that did to the markets. So it's going to load some stuff here. Let me go back just to the beginning of the month back in 2020. Yeah, okay, so Black Thursday, it's hard to see. These are small lines, so apologies if it's tough to see on the stream, but we saw Black Thursday happen right here on the 10th. Prices fell off a cliff. It actually went down as Bitcoin went down to like 3,400 after being around 9,000 a couple days prior. And then you see all these rises, which are still dwarfed by the recent discussions. This is when Omicron was really starting to take hold of the world. But here, these were still huge candles at the time. Fear was taken over up until here. And then as soon as it started dissipating, that's when prices rose. So when it's a gradual process, it can be good if it's related to a catastrophe when the candles are moving down. But if it's a sudden spike, like right here, that's when price direction changes tend to occur. This was obviously the biggest spike. I believe this is when Omicron really started to hit the world's consciousness. And we initially had, just like in the war, the price went down right before it. And then crypto decides that Omicron is the reason. And then price bounces back up temporarily before falling back down for a variety of other reasons. So just wanted to give a little perspective on how the real world news can and will still impact crypto. I'd say, the most fresh topic was inflation or FOMC, right? If we put those together, we can get a picture of what happened after the announcement that interest rates would rise a couple days ago. We had the big announcement here. Let me go back into just the past 6 months. See what that looks like. Yeah, so we can tell very, very easily when Powell made the announcement that the interest rates would be rising. Actually, no, wait, hold on. 13th, I feel like they did that on the 16th, so I could be off on that. But either way, I think there was an announcement that the FOMC would have a soon conclusion to what the interest rate thing would be. And I think that's what happened here. Prices kind of became a little volatile. If we were to zoom into just the past week, we could probably see the effect a little better. Here we go. So you can see right when all that news went down, everyone's like, oh crap, I need to get out of crypto. That initially pushes the price back down, followed by a bounce that went above where it was beforehand. And obviously we rose ever since then, getting to 41.5, I believe, at one point, before declining just a little bit to where it is now around 40.5. So that's probably no longer going to be a very important topic. Obviously, with the decision now made, many were speculating that the fears were already baked in to an extent. We made a post about that, actually. Let me see if I can find that. Yeah, so one more down. Yeah, so right here, we talked about how Jerome Powell and the FOMC announced their first rate hike since 2018. The initial news spike led to a price bounce, and altcoins were actually the ones that were really taking off during this time. So this chart doesn't really do it justice, showing the gradual price rise. Bitcoin going up around $2,000 in value. Altcoins, we were seeing like 20-30% jumps right after that news broke. And this kind of just highlights, the initial fear spike, spikes coming in at the top. And then once the actual news breaks, which happened here on the 16th, like I was speculating, that's when we actually saw prices go up. So fear spikes, these were rumor spikes where we're not sure whether there's going to be a confirmation. And then this is the actual news breaking. So it goes back to the age-old statement, sell the rumors, buy the news. In this case, sometimes it can be buy the rumors, sell the news if it's something good. But in this case, it was something very bad, which is interest rates rising and impacting economies negatively, crypto being correlated to the economy. So that's something that I think was a good learning lesson for a lot of us. Our staff was tracking this closely, trying to really get it right and figure out what kind of content we could put out that would be advisable and fair and objective for you guys as viewers and consumers of our content to gain some knowledge from. And I think we did a pretty good job. It's not a perfect science by any means to see these kinds of developments come into play and then make our decisions on trading purely by what's happening from speculation. But I do think that over the past couple weeks, probably last month, ever since the war news broke, myself, Max, and many of our team members believe that this has been a particularly fragile time for crypto, where more than most times during crypto's 13-year, 14-year history, it hasn't been able to just fluctuate. Prices haven't been able to fluctuate independently from what has been happening in the real world. It's been very, very much tied to real world events. That can be due to more retail traders, large sharks and whales being in the space now who have an overlap in equity. These are all reasons for crypto being in kind of a new era. And this isn't just an anomaly where we've got inflation and war and pandemic fears all happening at the same time. I think that for the indefinite future now, because there's so much overlap with real world equities traders being in crypto, there's going to be more impacts on crypto prices whenever a crisis or something great in the world happens, one way or another. So it's something to keep in mind. This is very likely to be the new normal. All right, that's enough on that. Let's get into one other social call by the crowd to see how speculation is impacting things. This is just a simple bull market versus bear market chart illustration. Blue is bull, red is bear. We can see, let me get on shared access. That would help a little more. Yeah, so check this out. When you see the bear market spikes really dominating, that obviously occurs as you would expect when prices had been plummeting as they were at the beginning of the year and in the later part of January. In both cases, when bear market calls really started to dominate, prices actually rose shortly after. So this is perfect, I wouldn't say perfect, but very, very solid inverse correlation that you can use to your advantage and is a sign of fear. Obviously, you'll see bull market go up a little bit too, relatively, but when the huge red spikes come in here, prices tend to rise for the next few weeks or at least few days afterwards until bear market calls settle down. So that's a primary fear indicator that you can keep in mind. You even saw it sort of right here. Yes, there was one further leg down, but it eventually led to a huge leg up. And this was happening as Putin was declaring war. Same here. March 7th, I believe this was more due to the early concerns about inflation and the FOMC making their announcement, which they did a week later. Prices rose immediately after, and after a little bit of volatility, they've risen back up again. So I think this is a good one. You may not even need bull market involved in this. And this alone, just looking at the bear market spikes, can give you some nice indicators to when the crowd is being overly fearful and then pounce accordingly. All right. So let's move over to on-chain metrics. Start with Bitcoin. Obviously, that's where we wanted to keep our focus for this video in particular, but we will give plenty of time to look at some altcoins. We have a poll that we put up on Twitter yesterday, and we also want to give one or two choices to the people who bothered to tune in for the stream and hang out with us live. We always try to reward people who are here and chiming in on the conversation. So what I'll probably do is choose from a few assets that were talked about on the poll, if I could find it. And then I'll also take a few suggestions, and we'll hit like 3 to 5 different assets. Here we go. So I'll leave this open for later, and when we are ready for them, I'll just scroll down and pick the ones that have been most prominent. I think Luna was up there, but we'll comb through that really quick once the time comes. All right, so Bitcoin. We begin with circulation, as we like to do. This is obviously a very noisy chart. We're looking at the one-day circulation to see how many unique tokens are moving from address to address on the BTC network. We did see one huge spike here right around the turn of the month, February 27th to be exact. it didn't really do much. The overall trend, if I turn on 30 days, 30-day smooth moving average, we do see that it is starting to move up a little bit. This is a very long-term move up, though. It started really all the way back in September. And since the all-time high occurred when there were about 174,000 or so Bitcoin on average moving daily, it's just a little above that, around 188, 190 or so. So not much to say looking at this chart. We do, of course, have this NVT model that's showing that between last week and now, we went from semi-bullish back to neutral. So circulation had dropped off a little bit when looking at the close intraday data coming in. And to me, that's a bit concerning. It means that people are stagnant right now. It would make sense leading up to the inflation and interest rate hike decisions that were made just a couple days ago. But nevertheless, seeing that this bar is starting to rise, a higher bar is bad on this chart. A lower bar would mean there's more circulation. That's going to be a concern and tell us that perhaps the market cap levels that Bitcoin are currently at are not showing a bullish divergence compared to the amount of unique BTC moving on the network. And we need that to stay in the green zone to be confident that there would be a turnaround. So the last couple days look better. It looks like ever since the announcement was made, we started to see some nice hash marks down low within the average bar here. If that continues going into next week, I'd feel pretty confident that Bitcoin is turning a corner and is able to break free from all of the real news events that have been hampering it down the last 4 months. But it's a wait and see for now. Okay, that's good for circulation. Daily active addresses, I won't waste too much time. I think it's kind of a similar situation where we're just seeing a lot of flatness, not really a huge move down or a huge move up like we had seen for the last few months or over the course of the last year, I should say. So I'll skip that and we'll move on to MVRV, which is a very important subject. MVRV, for those who have tuned into many of our previous streams, we want to stay, I can move the axis. That's weird. It's being a little laggy. Sorry, guys. Sandbase is being laggy. So I'll just move straight to the model. I know we're already 23 in, so I want to get to as much as possible. Bitcoin's average MVRV, so this is taking different time frames, 1 day, 7 day, 30 day, 90 day, 180 day, 365 day, average trading returns, blending them all together and showing how in profit or how in pain or loss the traders are. And right now, we're actually a little bit better than average, meaning there's just a slight amount of pain compared to the normal rate of Bitcoin's average trading returns. So 0.11 means there's around, I guess I would call it like 11% above the normal standard deviation or resting rate for MVRV in terms of it being a slightly less risky time to buy due to there being just a little bit of pain. Even though Bitcoin has gone up slightly in the past day, the long-term trends, especially like the 3 and 6 month trends, those are the ones where traders are really in pain because there's been such a massive retracement since November. I think something like 43 to 45% retracement overall. Altcoins, though, there's still some meat on the bone. Looking at assets like AMP, Chiliz, Curve, Decentraland, Engine, Phantom, Loopring, Scale especially, Ren, the Graph, the Sandbox, and even Wi-Fi. These are assets that are showing a bit of a semi-underbought divergence because there has been so much loss on the networks from traders that had been trying to buy dips and failing over these past 4 months since prices really started to free fall. So keep that in mind. You know, even though altcoins have already had the better week, this tells me that there could still be some traction left on that, assuming that Bitcoin can stay afloat. So going back to Bitcoin, we can look at a few more metrics to see just how healthy the network is right now. And that is just completely frozen. So I'm going to give it a refresh. That's not good. Balrash, can you check to make sure Sandbase didn't go down? Am I even live? Can I be heard?
Checking on my end. I still hear you.
Okay, thanks.
I think you're still on stream.
Yeah, super weird. It's telling me that it can't load right now.
Seems to work as usual for me.
All right. Man, it's just completely frozen on my end. I've never seen that. Fresh. It's getting nothing.
Okay, I changed the stream away from your screen, so maybe you can restart your entire browser.
Yeah, I'll give it a shot. Yeah, it is. It's not the browser. It's just simply not loading on my end. I'm wondering if it's location based or what. Hey, Chad, if anyone has Sandbase loaded up on their browser, can you give it a refresh and see if things are up on your end? Balresh, if yours is working, I would imagine that everyone else should have theirs working as well. Sure. Let's try that. Goodness. Sorry, folks. Yeah, that's certainly not happened before. Oh, that's promising. Okay, we're back.
Awesome.
We are officially back. Hopefully that doesn't happen again. You can reshare my screen if you're still off of it. We all good? Sweet. All right, sorry about that, folks. So let's try to make up for a little lost time here. Funding rates. Let's look at Binance by itself really quick and see what's been going on. It's mostly been a continued trend of people trying to short and usually not being very successful, right? We can see the largest spike here where people were really trying to bet against Bitcoin after a small dip, and liquidations happened big time right there. Another one right here, big short, liquidated. Minor here, probably some liquidations here, and then a third time. So you can see the trend. The last few attempts where people were shorting quite heavily, and the contract funding rate for Bitcoin on Binance was skewed massively toward people betting against Bitcoin. That's when prices tended to rise. Vice versa, obviously, you look back in October, November, when people were trying to super long near the tops, they got liquidated in the other direction. Big liquidation, big liquidation, big liquidations right after the all-time high. And even like this one, it looks like people did okay and then quickly neutralized. But like these two spikes, you know, right at the top. So this is one of the best, in my opinion, leading indicators that can really show you some alpha, because this is where people are actually putting their money where their mouth is and betting for or against assets with real money as opposed to just commenting about it on Twitter. So when you see massive shorts, people really do believe that prices are going to go down, and crypto prices, as we've discussed many times, tend to go in the path of least expectation from the crowd. So these are better buy opportunities than usual. These are worse buy opportunities than usual. We also have a funding rate model here where we can see that the blue line here is representing the average Bitcoin funding rate across 5 different exchanges. And the purple one is averaging the altcoin funding rates, the top 100, 150 or so that we have data on to show when people are leveraging long or leveraging short to a high degree. When people were starting to get above average here for both the purple and the blue lines, this was close to a top, right? And then right here, we start to see a drop off. There's some shorting going on. Boom, one more big leg up. Probably some liquidations that happened here. And then things started to neutralize. Of course, it's shifting a little bit because it's moving on to a new hour. But you can see when people start to long just a little bit, these are very, very small longs, and they're 1 hour versus the 8 hours that we were just showing for Binance. That tends to be when prices correct. And then as things get low here, that tends to be when prices rise. So we're seeing a continued fluctuation just on the 1 hour cycle, where anytime people start to get a little too cute with shorting, prices rise. People get greedy with longing, prices tend to drop. And that's been something we've seen for all of crypto's history, essentially. You want to avoid being in assets when people are euphoric about them, and try to get in when people are fearful and there's blood in the streets. We can even look at asset-specific funding rates to see which ones are still showing a significant amount of shorts. We see Axie Infinity here, Dent, OKB, Waves, which has been on an absolute tear for a while. You'll tend to see people try to logically short the ones where there was a recent big pump and they think they're about to come back down. Usually, though, the assets don't start to come back down until after people stop getting cute and trying to short just because of a pump. And once they give up, that's when you'll see the actual natural decline after an asset spends a few days or a few weeks decoupling from the rest of the markets. So if you have Sandbase Pro, this is a great model to be using and have at your disposal. All right, so that's a little on funding rates. We just posted about this a couple hours ago. Supply on exchanges. I'll actually go to the official tweet here. So the overall supply on exchanges just in the past 2 months, I believe it's down. Yeah, it's down to 10.25%. It was at about 11.85% on January 17th. So we're talking a 1.6% drop of all of Bitcoin supply away from exchanges and moving to cold wallets. That equates to about 13.5% overall less Bitcoin on exchanges than there was just 2 months ago. Pretty big deal. This is obviously more of a good sign than bad, as it indicates there's less risk of a major sell-off, another leg down that could happen. Doesn't mean another leg down can't happen for a variety of other reasons, but in a vacuum, when there's less of a coin's supply on exchanges, it logically means that there can't be quite the amount of damage done compared to when there was a lot of coins on the exchanges. So keep that in mind. And we're basically at the lowest level in terms of the ratio of Bitcoin on exchange versus off. It's at the lowest level since December of 2018, which should be about a 39-month low. And that's great to see, obviously, and something that should be considered encouraging for the long term and the hodlers of Bitcoin who are looking for justifications for continuing to hang on. So that's supply on exchanges. Yeah, let's take a look at Whales here really quick now. So we talked last week about how it was just starting to, actually it was right around here. It was just starting to look a little more encouraging. But then it started to drop off here, and the supply the last couple days, it looks like they've accumulated about 0.07% more of Bitcoin, which is still several millions of dollars. But it's not that significant based on this perspective. We can see very clearly that the trend line since late October has been not a great one in terms of the amount of Bitcoin held by those key whales that are holding between 100 to 10,000 Bitcoin in their wallets. And this group is selected by very much in intention, because anything over 10,000, it's very, very high majority owned by exchanges where they're not actively trading or reacting to price fluctuations. This group of 100 to 10,000, a lot of them are, I'd say the majority of them are actual traders that are reacting and trying to buy dips, sell at highs, and they have the stake to actually move the market. So this is why we look at this group so closely. And right now, it's unfortunately still in a down range. Very, very minor uptick in the last couple of days, but nothing that would really change our perceptions and move the needle. So that's Whales. Exchange flow balance, this would obviously match up with what we just showed with the supply and exchanges. Lots of exchange outflows, not a lot of exchange inflow days. This would, of course, be good. We haven't really seen enough huge spikes where there's going to be a sudden reaction with prices moving back up. We tend to see inflows have more of an impact on price than outflows, because people could be moving coins off of exchanges for many reasons. But when people move coins onto exchanges, there's really only one reason for it to happen, and that is to sell, or at least prepare for selling. So we tend to see these downturns right when there's a big supply and inflow of coins moving onto exchanges. But outflow, it's more just a long-term sign that things are looking better for Bitcoin fundamentally. Still a good sign to see all of these low spikes and not a lot of high ones, though. And we're getting a freeze again. Can chat and Balresh once again check to make sure that this is just me and no one else. You want to maybe just share your screen, Balresh? We can try on your end. Is that even possible while you're running the stream? It looks like it just refreshed. It's okay. We'll stick around and hopefully it doesn't happen again. Sorry for the technical difficulties, folks. We're human and these things will happen, but hopefully as the platform continues to get better and better, these will be more and more of an anomaly. All right, so we talked about exchange inflow and outflow, realized profit loss. We talked about this last week. Generally, when people are taking profit at a loss like this, you'll see these big down spikes, and those are generally when prices bounce. Alternatively, you want to avoid being in an asset if you see a huge profit take essentially while they're way above zero in terms of their amount of money made in their portfolio. So when you see these, prices tend to go down. Happened in all three of these cases on the big spikes. And recently, just yesterday, we saw the largest network realized profit loss downtick since early December. So we're talking about a 3-month high or low, so to speak. And obviously this one happened right when there was a huge downturn and then there was a price bounce up. So considering this one happened and there hasn't been a price reaction yet, it could be some potential alpha, certainly not investment advice. I didn't say that at the beginning of the call like I usually do. These calls are not meant for investment advice. We simply are looking at divergences to indicate what tends to happen historically when we see the kind of patterns that are happening right now. So considering there was one here and there hasn't been a price reaction, I'd consider that a nice bullish sign for Bitcoin, at least for the short term. So if you're willing to bank on this metric alone, it looks quite solid that because someone took, or a group of people took money at a loss and got out of Bitcoin, there's going to be something that can happen to make up for that loss and get the network realized profit loss back to a neutral point for a long period of time. Development activity, not much to say. It's been mostly an up and down journey for Bitcoin. This part was kind of an anomaly, and I think it was related to some of our data going down. So overall, not much to say there. Development activity for Bitcoin is always going to have to be taken with a grain of salt. Social volume and dominance. Okay, so let's get into some of the social metrics really quick. And in 3 to 5 minutes, we'll start looking into some asset requests. So the amount of discussion related to Bitcoin right now is on the decline. We can see here that, let me just get rid of social volume because it's not as valuable right now. Social dominance is indicating that there is less and less discussion related to it compared to the other top 100 assets in crypto. This isn't surprising over the past week, especially because altcoins have been the better investment in terms of just raw returns. But seeing that we got down to almost single digits in terms of the percentage of people talking about Bitcoin versus other assets, that's not a great sign. We definitely prefer to see Bitcoin up here, right? This would be a sign that there's some capitulation forming when prices are going down and discussion rates are really high. Zooming out a little bit, it might illustrate it even better. Do like the last 2 years. So social dominance, you can see just how high things were back here in July 2020 when things are really starting to take off. November 2020, huge bull run up here. This isn't the same as sentiment where it necessarily means euphoria. It just means there's a lot of polarization, and we see good reason for prices to go up when the focus is mainly on the number one asset that is pumping all of the other altcoins, which is Bitcoin. But alternatively, you can see right here when prices were hitting the then all-time high, a little above 64K in April, while dominance was plummeting due to altcoins kind of, making their presence felt at the time. This was a bad sign, indicating that something like this would occur. And of course, as soon as it did, look at how the dominance went from down here all the way to up here. Now we're kind of seeing a similar trajectory down. If I draw this line and compare it to this line, it doesn't look a whole lot different. The interest is clearly lying in altcoins right now, once again. And with that said, there's going to be a tremendous risk in Bitcoin dropping out of nowhere and taking all of the altcoins along with it. So socially speaking, this is really not a good sign. I'd really love to see social dominance above 20% like it was when it was recovering here in May through July. Even this plummet here, this was a little bit of a concern, which probably had something to do with this mild drop. But see how dominance was still in the 20 plus range percentage-wise, telling us that it could move up, and it eventually moved and hit an all-time high. So social dominance, not great right now. Keep an eye on that. If it still goes even lower, be careful, because it means that people are just ignoring the number one crypto asset, market cap-wise. I'm getting a third freeze here, Balresh. So I'd insist that we either try to share your screen, or I can't think of an alternative. I would say, unless something good happens here in the next 15 seconds, I don't want to waste the viewer's time, and maybe we'll just have to cut the stream early if you can't both share your screen and run the stream at the same time.
I think we might get into more trouble by me trying to do that on the spot. So in case you're not getting an unfreeze in the next couple of seconds, let's maybe cut it earlier today.
I hear you. Yeah, super disappointing because we had quite a few assets that we wanted to uncover and see what was going on. But if we don't have access to Sandbase, we don't have access to Sandbase. And I apologize, guys. What we can do is maybe do an early week or midweek review of many of the altcoin requests that have been coming in, because I don't want you guys to be missing out when that was something that was so anticipated for this stream. All right, Max. Yeah, let's call it. Even if it comes back, I'm afraid it's just going to happen again in 5 to 10 minutes. So. All right, guys. Well, we got 45 minutes in and talked about a lot related to Bitcoin, which was the objective of the call. And overall, it appears that there are not enough signs to indicate there's going to be a huge breakout right now, at least based on the leading indicators that we're looking at lately. Obviously, it's been good for altcoins, but I would keep in mind, the MVRV divergence model. If these altcoins and a lot of the green starts to look neutral or even in the orange level again, that would be a sign to be careful, especially with the dominance of Bitcoin so low. Whales not really accumulating right now. It's only been 2 days since the Fed have raised the interest rates, so we might need to see, how prices react over the weekend and going into Monday or Tuesday next week and have a more clear picture. And I'll look into releasing a midweek solo video without a stream to uncover how things have shaped up for Bitcoin, as well as look at some widely requested assets like Luna and some others that you guys have been requesting on this call. So again, apologies that we have to cut this one short. I do wish you all an amazing weekend. I'll be back with you guys very soon. And thanks so much for supporting our data platform. It's been awesome seeing the growth that our community has shown and the positivity despite 4 months of price retracements here. And just the overall interest in data and how people are more and more understanding the significance of it in terms of where prices will move based on all of the divergences that are showing all the time. So thank you all. Talk to you soon. We'll see you next week, if not earlier.